one of the, I guess, the core tenets of the deal maker is your network is your net worth.
Yep.
And we've got that, not just that one, but like the 4 or 5 things that they have. We've got a banner with that at the front of the room. And so that's part of what we do at the beginning of each meeting. There's a time we just get the whole room to kind of join together in one voice of saying, the deal maker creed. And we see it, right? We see that lived out. Your network is your net worth.
Welcome to Burning the Ships podcast, and I'm your host, Jason Seward. And today I've got Ray Burkhalter from Tuscaloosa, Alabama. How you doing, Ray?
That's right. Doing great, man. Chilly morning in Tuscaloosa today.
Am I safe to say roll tide with you?
Absolutely, 100%.
Yeah. So Ray, I'm glad we kind of had to shift the schedule a little bit. I had a conflict come up when we were supposed to record a couple weeks ago, but I'm glad we were able to get this on the calendar and have you in here today. And before we get into everything, I'm gonna turn it over to my man JJ for JJ's joke of the week. Take it away, JJ.
Why did the kid bring a ladder to school? 'Cause he wanted to go to high school.
All right, buddy. Good stuff. So, Ray, you and I met about several months ago. I think it was September. We were down at Mary Hart's hard money lending mastermind. She did a couple-day event down there in Asheville, North Carolina, and got to meet you and another gentleman on your team. And really, I mean, right out of the gate, I could tell just hanging out with you guys a lot that, y'all were very similar in the way you approached your business, that the same mindset, same ethics and morals and all that stuff, the integrity that we approach it with. So I knew I wanted to get you on here, and I'm glad we were able to get this done. But you've worn a lot of hats over the years, and I'll let you get into all of that and tell your story. But currently your main thing is you're a hard money lender as well, just like we are. And you're focused down in your market in Alabama. And, from a volume standpoint, you're about the same size as we are. So we're kind of, we have 2 different models currently, but, and we'll get into all that. But I'd like to really unpack all that and kind of hear the story, let folks know who you were and kind of how all the evolution you went through to get to where you're at now. And with that, I'll turn it over to you and let you tell your story in any way you want.
All right. That sounds great, man. And I'm excited to be here today. But when we got to meet you guys, being in hard money, it's harder to get around people that understand what you do and talk the same language. And so when we came together in that group, I don't know, 10 or 12 people, it's just great to take that time away to meet some quality new people and have those conversations. So, if you would have rewound things for me for, many years ago and said that I'd be here today talking about, private lending, hard money lending, I never would have thought that. I didn't come from any kind of business background. My education, when I finally decided what I wanted to be when I grew up, engineering is what I picked. I was always good at math and science and, numbers. And so I just ended up going that career. And I went to the University of Alabama, got a mechanical engineering degree. And then I went off and had a little over a 10-year career in engineering. And a lot of good things happened with that. I got a lot of international travel that really kind of helped shape my life, shape my perspective. But after several years in that, somewhere along the way, my wife really got interested in real estate. And at that time, I wasn't really interested in it. But one of my managers at the last place that I ended up working, which was at the Nissan manufacturing plant in Smyrna, Tennessee, one of my managers handed me a copy of a book called Rich Dad, Poor Dad, which I'm sure it's probably been discussed on this show before. And I didn't grow up with any of those concepts. I didn't hang around people who had the concepts of earning passive income and just, all the strategies that are talked about in that book. And so as I began to process that, I realized that if I just stayed in my job and didn't do anything else, I wouldn't have passive income. Or I know now that there's ways that I could have, such as investing in a private lending fund, but I didn't even know those things existed back then. So that got me interested in real estate as a way to build some passive income. And we started studying. My wife went and got a certificate in property management. So like for, apartment size multifamily. So she went in and worked at a really rough, couple of 100 unit apartment complex for over a year as kind of her like real estate boot camp. And, I started learning how to do marketing for real estate and learning how to do rehab projects. And so that's how we got started out in real estate at all, was just buying houses, using private money to do it. And then, some of those turned into rentals, some of them we sold, but we just got more and more into that. And after a couple of years of that, we were seeing that grow, and my job became a restriction for the business growing, because I was doing it on weekends. I was doing it after hours. And so, that was at the end of 2007. So 2008 is when I, retired from engineering. I really went from one job to another, but retired from my engineering there. And that's when we really kind of got into real estate and initially learned how to run a business. Although I look back now and realize how much I didn't know about running a business. But after a few years of that and meeting more people, so just like the way we met, I've met so many people over the years at conferences, at masterminds, and so I was able to go back in 2010 and attend a private money, like a 3-day private lending class. And a friend of mine who was also a mentor ran their coaching program, and he said, "Hey, I want you to come out, check out the class. If you like it, we need another coach, and I would like for that to be you if you want to do it." So that was my first introduction to like being a private lender. And at the end of 3 days, they introduced me as Coach Ray. So I had to hit the ground running. And when I talked it over with my wife, we were like, "Hey, if I'm going to coach this, let's do this." And so by that time, it was spring of 2011, and that's when we did our first private lending deal. And so,
all right, can I pause you there, because I got a bunch I want to unpack there, and then we'll keep it going. So, well, first of all, you mentioned Rich Dad Poor Dad, and this is very ironic because my last guest that I had on here brought up Rich Dad Poor Dad, and I stopped him. I said, I've had over 200 episodes. Half of my guests that brought up that book as being impactful. It was an impactful book to me. I hear it on other people's podcasts being brought up. So I just mentioned to him, I was like, we were having a conversation about how one book and one mindset had such a big wave of impact across everything, not just real estate, but just entrepreneurs in general. Well, he asked me if I had the author Susan on the podcast. I was like, I know the author is Robert Kiyosaki, right? So he went on to explain who Susan Lecter was, who was actually the real author of that book. And Robert, he's the face of it and had the ideas and stuff, but she co-authored that book and a dozen other books with him, and she was the CEO of the Rich Dad Poor Dad brand for the better part of 10, 15 years, something like that. So this particular guest knew her personally. Wow. Immediately after the podcast, introduced us, and she's coming on the show next week. So
awesome.
For me, it was a big moment because that book gets discussed so much, not on just this podcast, but in the entrepreneur world, and so I'm very excited to have her on here and kind of like peel the onion back there. So I'm glad you brought the book up.
I look forward to hearing that one too. Yeah.
Yep. So, all right. So 2008, you effectively burned the ships on your career. Okay. At that point, had y'all built anything in real estate that had already gotten big enough to replace that income, or was it you could see a vision and a path where that could happen pretty quickly?
It was getting there. It definitely wasn't like stable income at that point, and fully taking the place of, but it was enough that we could see, hey, we're going to be okay over here, and then better off in the future with that.
So at that point, when you made the decision, had things with the economy started going south? Because '08, that's known as the bad year, right? And
Sometimes when you're in the middle of it, you don't know when it's that bad. So no, at that time there was still, so much optimism, and houses were being built at a really hectic pace, and a lot of investing going on. A lot of gurus out there just teaching everything that they were teaching at the time. But really, I think another thing that helped us feel comfortable, even though we didn't know what the economy was about to do, we had a lot of money in savings. My parents, they were both born in the 30s in rural towns in Alabama, and grew up like picking cotton and farming. I mean,
right.
They were from rural, and they didn't have a lot of sophisticated financial things to teach me. But they taught me about God, and they taught me not to spend more money than I earned. And so both of those two things, right? I've tithed as long as I can remember in my working life. And I feel like that's given me a healthy relationship with money. And then you put that together with not spending everything that I earned. We had a nice amount of money in savings that, even though the business wasn't quite earning yet enough to totally replace the engineering, it's like we saw it growing, and we had the reserves to feel good about it.
This sounds eerily similar to mine and Bill's situation. You met Bill, my partner, because same boat. We had been building a real estate portfolio on the side of our corporate careers, which we had pretty demanding but high paying corporate careers. But the real estate was not close to matching. Like, it wasn't that passive income coming in that's going to match, and then we could just sail off. But to your point, we had been super aggressive with our savings, and and I say this, I don't know if I'm putting words in your mouth, but for us, we saw the savings and that kind of nest egg as to buy us time and runway to try something. And we weren't going to burn it all to the ground, meaning burn all that savings away. But we knew we had a good, comfortable 2 or 3 years to try something. And if it didn't work, we just go back to our jobs, or go find another job. Did y'all have the same mindset, I guess?
I had quite a few people ask me back then, why did you leave a good engineering job? And it's been quite a few years ago now, but I don't feel like there was any time that I really thought I would have to go back. I was so determined, and I was so sold out on, this is what we're going to do. Man, at the time I didn't realize how to really make money from real estate. I knew how to do transactions, but if I could go back and tell my younger self now, and if there's anyone, listening to this podcast that they're at that point and they think they're going to step into real estate and make a lot of money, there is a lot of money in real estate, but as I've been in business and involved in real estate for longer and longer now, approaching 2 decades, I see more money made in business that gets invested in real estate than more fortunes made in real estate itself, if that makes sense. It's not that you can't make money in real estate, and it happens. We've funded rehab deals where people have made over $100,000 on one project. That's true, but right, it's still, you got to be running that like a business. It's not necessarily the product, I guess is what I'm trying to say. It's your business systems. It's because one rehab that makes $100,000, that's great. But if you can never repeat that, what have you got? It's you've got to have something repeatable. You've got to be doing your real estate like a business to get the kind of results. And so I was back then in this like false reality land of thinking I was going to buy enough rental properties. And back then, there wasn't anything called the Burr strategy back then. I had just worked out the numbers being an engineer. I'm like, how do I have rental properties that are rehabbed and have little to no money in it? Later on, somebody came up with the, cool name of
Yeah.
Burr. But what I didn't see back then was in doing that, I was choking off the cash flow. And so we had quite a few rental properties and there was some cash flow, but it wasn't anything enough to move the needle, because we had them pretty highly leveraged so that we wouldn't have money in it, So, yeah.
Yeah, I tell people the same thing. Like we had the same vision. We are going to build enough rentals to have each one was going to spit out 300 to 500
Yeah.
a month in cash flow. So I needed, this many of them to meet my income goals. It never, ever, ever, ever works out that way. And
I've done the same calculations.
yeah, and and talking about kind of giving advice to folks that are considering, not working in the corporate career. Like my advice to everybody is hang on to those W-2 careers as long as you can. You're bankable, with that income. You can save more while building. I mean, it's going to be a grind for several years building something on the side, but just to say, all right, I'm going into real estate full time and I'm going to leave my career with no cushion or no plan or structure around it. That's a dead end in most cases, I think.
Yeah.
So.
Yeah. It stresses you out and you start to make bad decisions when you pull the plug too soon, if you're making a transition like that.
Right. So 08, you leave the career. Now it's full time into real estate. And then you mentioned in 2010, 2011 ish is when you connected through that mentor of yours, and now you're a coach. What did that 3-year period look like? That 2 to 3 year period from 08 to then, what were you doing? What were y'all focused on?
Yeah. From 08 all the way still ended to the 2010, we were still buying properties. Like I said, it wasn't immediate like that you could feel it back then. Now I didn't understand what KPIs were back then, and I do now. And so if you have data that you're measuring about not just your business but your industry, what's going on in the area, you can start to see some of these things. If you're seeing building permits trending down, if you're seeing days on market grow longer, some other things that we do look at now that we didn't know about back then. Transactions were happening. People were still buying. All that stuff was going on until sometime late in 2009. And it seems like on the Friday of that week, business was like normal. And then by Monday, they had changed the rules on who could get qualified for a loan. And the houses that we had that we were getting ready to sell to the first-time home buyers or second-time home buyers, they could not get qualified anymore. And so we were stuck with over a dozen properties that were either finished or in some stage of rehab. And that was the stress point right there. Because they were all funded with private money. We had interest payments to make on those, and they weren't selling. You could, there was a period of time there where it felt impossible for someone to get a loan to buy a property from us.
Right. How'd you get through it?
A lot of prayer. I remember a legal size document that I made that had a lot of properties listed on it, and we were putting everything out there that we couldn't sell. So we put it out for rent to own. We put it out for owner financing. We put it out for straight rental. Anything creative we could do to get people into those properties, we did. And so, that took care of the covering the holding costs on the properties, and it gave us the runway. So from there, it was just slowly someone would finally cash out on a lease option deal. It took some time there, but that got the overhead covered and allowed us to,
Right.
we never missed a payment and never, just some stress. But
I'm gonna come back to this, but I want to look. I'm setting it up for a future question here, but am I correct that it was you and your wife together doing this full time? Is that right?
that's right. Yes.
Okay. And you mentioned stress, and that I would imagine that introduces a lot of stress on the marriage and all that stuff. So I want to come back to that, but I just want to clarify that it was you and your wife full time. Did y'all have children at the time, or do you have children?
It was just the two of us.
Okay.
She's got a son, a stepson for me, but he was already an adult at that time, so we weren't raising any kids. It was just, yeah, that would have put a different wrinkle in there of concern and how much runway we felt like we needed.
Yeah. How much during that time? So you explained that you were an engineer. You had the analytical brain, right? That that doesn't go away. You still have that today. There's a lot of pros to that, meaning you know how to underwrite, you know how to really dissect the numbers and see trends and things like that. Does that analytical brain ever become a bottleneck, or did it at any point?
Yeah, there's definitely the tendency to overcomplicate things. I still have to guard against that now, because I can take something that is perfectly simple and really make it complicated.
Right.
So thankfully, I empower the people around me to tell me if I'm overcomplicating something, because I one of the things that we talk about here on our team is efficiency. And so those two things butt heads, right? If it's overcomplicated, it's probably not going to be efficient. So that's one. And then the other thing is that probably a lot of engineers, my personality is more on the introvert side.
Yep.
And I used to think that automatically that just means shy. And I was pretty shy, growing up. But I've learned over the years that introvert, extrovert is more about where do you get your energy? Do you get energy when you retreat to a quiet place and you just can think to yourself, or when you're out engaging with other people? And so for me, I love people. I love conversations, but really mostly I get my energy from quiet time and I love reflective questions. I love learning and, making strategic plans and things like that for the future. But I think it could have really held me back had I not been willing to grow and learn how to build relationships with friends in business.
Was your wife, or is your wife, similar personality, or is she on the other side?
No, she's on the other side. She is 100% people person.
Yeah.
Hugs everybody that she meets, and when she's here with our team at work, when she leaves, she's telling everybody, "Love you. I'll see you tomorrow."
Right.
She's the heartbeat of the team with that extrovert energy.
So the reason I asked that is, and you've answered it perfectly, because I do believe. So again, talking about me and Bill, making the comparison there. Bill is the analytical, more of an introvert. You could probably tell that just being around us, but he's into the numbers and talking about what gives energy. We talk about that a lot. What gives us the most energy, and let's each lean into that. Well, the reason we formed our partnership is because he was very good with the numbers and the analytics and just figuring things out. I was really good with just starting fires, meaning in a good way, but like just drumming a vision up and talking to people and stuff like that. Well, I was terrible at what he does. He wasn't so great at what I do. You marry those two things and they balance each other out in the middle very well. And it sounds like you and your wife had that same connection to allow y'all to thrive. Is that correct?
Yes. Yeah. Absolutely. Very, very complementary skill set there. And man, there are things I learned along the way. I know you're going to come back to that marriage thing and work together, so I won't get into that. But I did. There was one incident where we went to go meet with a potential borrower, and I left that meeting thinking, because he was talking about all the projects that he had done and all this stuff. And he had a nice office, and we met with his project manager. So as we're leaving the building, she said, what'd you think about it? And I said, he, seems like he's got a lot of good things going on, probably somebody we can work with. And she said, I don't like him. There's something off. He's crooked. I kid you not. I was still doing coaching at that time. And that afternoon, I was on a coaching call with one of my coaching students that was in Southern California, of all places. We're in Alabama. We started talking about that just a little bit, and something that I said or something somehow it triggered. That guy was somebody that she knew. This lady from California, she'd been doing some kind of transactions here in Alabama. She knew about this guy, and he was fraudulent. And I mean, so from that point, I told my wife, I said, okay, your intuition,
right? We're trusting your
better than mine. So, I'm always going to take you to meetings when I'm, going to meet with somebody. And
yeah, but let's stay here, because I was going to save it to later, but let's talk about it now, because I think where I'm always curious, because you hear more horror stories than you do success stories when it's a husband and wife, trying to do the same business together. You guys obviously have successfully done it for almost 2 decades. Obviously there had to be some stress along the way, but what advice do you give, or just talk about that dynamic of working with your spouse, but also going home with your spouse and on vacation with your spouse while this business is running and stuff like that? Do you care to share any insight there?
Yeah. No, I got some good insights there. And just to be transparent, there are 2 different business models that we had over those 2 decades. There were all those years up front where we were rehabbing properties and running rental properties. And then from 2011 till now, private lending. Man, there was so much immaturity that I had to overcome back in that first job. I wasn't spiritually mature. I was self-centered. And you don't realize that sometimes, again, when you're in the middle of it, but growth is so important. Personal growth, spiritual growth, professional growth. And somewhere along the way back then, podcasts were not so much a thing, but books, conferences, somewhere through there, I learned that my tone, the way I spoke to her, said more than the words that were coming out of my mouth. So the way our job was set up back then, I did all the money raising, the deal structuring, closings. I did a lot of that side, and she did more of the work with the contractors to make sure that the projects were looking good, and she'd go out to get the houses under contract. And so there was a time that I remember very vividly where I was still raising money, and we had plenty of money to fund deals, but she wasn't getting them under contract. And so the business numbers were not looking good at that point. And I would say things to her, hey, you've got to get this under contract. We got the money, you got to do this. And so finally, somewhere along the way, she said, you're hurting me the way you're talking to me. And it wasn't the words, it was my tone. I was talking down to her. I was just too high of expectations for her. And so with all that said, if you're going to work with a spouse, if you're the male listening to this, understand that the marriage is not worth the business. If it comes down to it, I'm sorry, I might have said that backwards, but sacrifice the business, keep the marriage if you have to. But there's got to be a tremendous amount of respect there, not only in action, not only in the words, but the tone with the words is so very important. So when things ended up, we were in Tennessee at that point. We were still up there. In the meantime, my dad had been diagnosed with Alzheimer's. And so I told my wife, I said, if we don't move back to Alabama, he's not going to know who I am. So when we moved, that's really when we swapped gears from being hands-on in real estate to private lending. And I asked her, it was a very intentional conversation, because I told her, I said, I don't like the way that our marriage got stressed. I don't like the way that I treated you in that other business. If you want to be in this business with me, I'd love for you to be, but it's got to not have any negative impact on our marriage. And so I let her make the decision if she wanted to come back in and work together.
Yeah.
And
There's a bigger point there when you talk about tone, because my wife is not involved in our business at all. Like, she's a school teacher, loves it, and supports everything I do, but she's just not involved with it, has no interest in it.
right.
But we have those same conversations about tone, right?
Sure.
And a lot of times, and I'm sure you can relate to this back then, and I'm sure you've improved on it, but a lot of that condescending tone that we as men have, sometimes I think it evolves out of like us being younger, playing sports and being just guys talking to each other that way. And we know, like, if one of my buddies talks condescending to me, it's kind of a joke. Like, we don't even hear that. It's just how we talk to each other. And then you mature. Now you have a family and a spouse, and you're taking that same tone to talk to them. And you might have full intentions of being respectful and all those things. What's actually coming out of your mouth is what you mean, but you're saying it like you're talking to your buddies on the playground or at the ball field. And it took me several years as well to realize, oh, I'm not saying bad things. It's how I'm saying them and how it's coming off. And, so I think that is a very common hurdle that a lot of men need to work through. Not just in business, but I can only imagine how much more it complicates the business when you're trying to work through that. So
yeah, it was through the business kind of that I realized it, but yeah, it's across the board. I never want to talk harshly to her. We can have whatever kind of conversation we need, and if we disagree or whatever, but I don't have to be harsh.
Yeah. Right. Yeah. No, that's great. So let's y'all have the lending business now. I wanna spend a little time in that transition period. So you go to that conference. It sounds like the end of a 3-day conference. You were Coach Ray after that.
Yeah.
And so first question is, what do you think, or did they tell you what you did in those 3 days, or showed them in those 3 days to make them want to, without knowing much other than what they saw, now you're going to be a coach on that team?
Well, the guy that was my connection there, I had worked with him previously in with another it was another 3-day conference, but it was on how to do marketing for real estate investors.
Okay.
So he knew me. I'd done a little bit of coaching there, but that was that 2008, 2009 when things were nosediving. So, he knew me. The guy doing the course didn't, but the guy running the coaching program did. So I think he already had it settled in his mind that I was the one that he wanted there, as long as I resonated with what they were teaching.
Yep. Understand. Yep. So from there, you said you were teaching private money. Is that correct?
I was coaching people when they came out of that class. So what they were experiencing was hundreds of people were coming to these classes and learning how to do private lending. And then they'd do the same class 2 months later, and 90% of the same people would come back and they weren't implementing anything that they had learned. So the coaching program was to get people coming out of that and really on a week by week plan for how to implement what they learned.
Got it. And through that, did that kind of launch the private lending for you as well? Kind of open your eyes. And so while you're coaching it, I would imagine you're also getting educated on it, right?
Yes. Yeah. I mean, we had to learn a ton about the paperwork and finding deals and title companies and just all of that, building the capital stack. I learned so much through that. So that the way that evolved for me, and I don't know if I would change it if I could go back. Part of me says I would, but for many years there, my wife and I were lending, but just a handful of deals a month, and I was traveling every other month to go back out for those courses, and on also doing coaching calls. Sometimes 20, 30 coaching calls a month,
Yeah.
and traveling out. These classes were in California. So there was a lot there, but I kept learning more along the way. The guy that had that first program, as I started teaching him stuff for him, he built another program, and then he got freed up and he built another one. And I learned so much about finance through all of that, but also some public speaking, public training skills came out of that I didn't know that I had. I tell people that, like, he tricked me into doing it because he knew I knew some of the material for part of it. And he said, "Hey, do you want to ever, be in front of the room?" I said, "No." So a few months later, he's like, "Hey, my throat is really going out. I don't think I can do this afternoon session. Could you just help? Could you just stand up here with me and help me?" And so I did that. And then the next time it was like, "Could you just do that whole session? I'm exhausted." And then, before you know it, he's like, "Can you just do this 3-day class so I can go develop another one?"
Right.
So a lot of things I appreciate out of those years. But really the needle didn't move for us so much with the business until another book that probably some of your people have talked about on the show, Traction, the EOS model.
Yep.
That one really helped me understand how to build this into a private lending business, because before it was an LLC, yes, but it wasn't. We just kind of owned our own jobs, doing a few deals a month on the lending.
So where did it go from there? So now you're building it into a business. What year was this roughly that y'all kind of started looking at it as a business scaling?
So it was 2019 when we really had this idea that we wanted to start building a business, and it was 2020 we made that first hire. So just as COVID was coming out, we burnt it. You feel like you're burning the ship there as an entrepreneur when you make that first hire, because you wonder, can I really afford to pay this person? Can I keep them employed every month and make sure that we're going to do enough business to keep my obligations there? But that was the beginning of building a team. Now there's 10 of us here, and a few are part-time, but it was when we really learned how to do private lending as a business and scaled up that started moving the needle for us.
How crazy is it that it sounds like two of the most pivotal points of your path? One was 2008, right as everything's crashing.
Yeah.
And one was 2020. The two biggest, like, of my lifetime, the two biggest, like, financial and worldly events. You're doing major pivots in your business. So.
Yeah. And I don't necessarily recommend picking those as points to burn the ships, but like I said, I didn't really know in that 2008-9 time frame what was going on with the economy until retrospect. I knew COVID was going to be a big thing. And when we made that first hire, I didn't know. You just didn't know. I mean, what were things going to stay shut down completely? We didn't know what all that was going to look like. So there was a lot of prayer involved with that. But man, one hire led to the next and the next. And with every hire, more business, so it spiraled up in a good way.
Yeah. I remember thinking, like, having maybe 2 days of real fear and when COVID hit on the real estate side, because I was still working my corporate career then, but so a few days like, man, I don't know. And then Bill and I both, because he was still working also, we're like, no, we're just going to go until the world tells us we can't. Meaning we're still going to try to buy real estate. We're still going to try to build our portfolio. And that was the best year we've had in our, as far as acquiring property. So it that could have gone the other way too, but it was, we just chose to not let it slow us down out of fear, if that makes sense. Sounds like y'all made the same choice. So from there, to scale a lending business, there is no scale without capital, right? So as you start building a team and lending, you mentioned y'all were lending your own money for a while, for years, but you had to make that at some point that transition into lending other people's money, like doing, doing it the way you're doing it now. So that required you to have to be somewhat go from analytical Ray to sales Ray, or somebody on your team or something, to go out and raise capital. So what did that transition look like for you?
So interestingly enough, all the way back at the beginning, one of the first classes that I went to, still as an engineer, looking ahead at doing real estate, was how to fund your projects with private money.
Okay.
It was in Atlanta. I remember going. I remember the hotel that we went to, because it was one of my first training pieces in this. So we started back then with private capital to fund our rehab projects. So I learned how to raise money very early on.
Okay.
I ended up being some of my coworkers. They saw what I was doing, and they wanted to get in on it. It was, friends and family. It was friends from church, just like anybody that knew us and knew what we were doing. They started funding our projects. And when we transitioned from funding our own projects to, in 2011, funding other people's projects, 95% of those people came over with us.
Okay.
So we've had our own money in, for a long time too, but we've been using outside capital for a long, long time. We have more than tripled people's money. They've been with us long enough and compounding their money and capital. So, I did have to learn to raise more, but it's been with us for a long time.
Right. And because a lot of my listeners kind of know our model as a fund where all the investors get pooled into one pot of money, if you will. You guys are structured a little bit different in the sense that you're kind of bringing investors in on a per deal basis, right? Connecting them to each deal. What are the challenges under that model? I know I've explained on here what the challenges are under our model. Like if we don't keep the money working,
Yeah,
it's bad, so
right.
What are your challenges that you face under that model?
It's it's been a couple of things, and we're in the midst of starting a fund as well, due to some of these challenges. So
Right.
a couple that first come to mind, is that doing it that way, you can't publicly advertise it.
Yep.
So we raised over 16 million and not able to advertise at all.
That's impressive. Yeah.
But as we want to continue to grow, it's just gotten more difficult, really, to do that. And when I look at the people who comprise most of the money that are with us, they're accredited. And so just the lack of being able to advertise is one challenge with that method that we got started with. But then also, as we scale up and you have over 100 loans on the books, you're closing 10 to 15 loans a month. When all of those are individual deals, the paperwork and the timing and the connecting with people for IRA documents, it's just became a nightmare. So that was kind of, those were two big factors that led us to say we're going to go the path of starting our own fund.
Yeah, I would imagine, like you mentioned, you've got a team of 10. It takes 10 or more to run all the administrative stuff involved with everything you just said. And if you could take that same team and, like under a fund model, eliminate a good bit of that administrative work, they can all refocus on different areas to scale even further. So
Right.
yeah, I'm glad to hear you guys are looking into move into that model. I think that'll benefit you a good bit. Having said that, where do you see, like, do you have, people work with different goals and different visions. How far out do you look? Where do you see this thing going for you guys? And share with folks the name of your company and kind of what markets you lend in and whatnot.
Yeah. Our company is called REI Funding Partners. And like you said earlier, we serve the Alabama market. We fund a lot of single family renovation projects. We do some multifamily. We do a little bit of ground up construction financing. This year, we're moving into some small balance commercial loans. So that's where we want to be for the rest of this year, and I would think into 27. Where we could see ourselves expanding is maybe into an adjoining state here. We really don't want to be nationwide lending.
Yep.
But when we have the systems and the software and the team, we can handle more capacity at this point, especially after we get the fund in place and we get control of all the administrative steps that we were talking about earlier. So really the goal this year is to get over 20 million in assets under management, so cash available to lend. And then, a thing that we're doing that I really, as many people as I rub elbows with in the private lending space, I haven't heard many people talking about this, but my wife she retired at the end of 2023. So she was off all of 2024. And then in 2025, we had a key team member leave to take another position that was a big step up for them. But it really, and on a team this small, when one full-time person leaves, you really feel it.
Yeah, right.
So my wife had to come back in just kind of on a contract basis to help. And so all of 2025, she's been back at work. But I'm really thinking, how can I get her, back to where she wants to be? Very, very part-time, but I want to have that flexibility too. So, we have sold part of our business to, some of the people on our team who are our key leaders. And it's as the years go by, it's going to be less about my vision and more about theirs.
I love that. Yep.
So we're really looking at what, Dave Ramsey calls the legacy part of business growth. So I'm going to continue to fuel it. I feel like I've still got energy for a few more years. I love what I do, love who I work with. I love, going to events like the one where we met. I do get a lot of energy from that. But yeah, that's what we're.
I can tell you this, just, we have a very small team. It's just 4 of us right now. So we're in the weeds of it every day. And, as you can imagine, but we've been able to deal with your team quite a bit, outside of you, and whatever you're doing or whoever's building that culture that you have in place with the folks we've communicated with, A+, like it's fantastic. I mean, from all aspects of communication, willingness to hop on a call and help and talk through things. It's that doesn't just happen by accident. You have either found the right people or trained them or curated that culture in a way that it definitely shines 100%. So
yeah, well, thank you for saying that could lead into a whole other discussion that maybe we have at another time, but
right.
The importance of hiring A people,
Yeah.
A players, not A people, but
Right.
their work ethic and their integrity and everything. That it's just we've gone the other route before, just sometimes out of expediency or we thought that's as much as our budget would allow.
Right.
And it's never worked out. And so we're sold out now on filtering for A players, and
Yeah.
we pay what we need to pay for them.
That could be an episode in itself. So we'll talk about that, because I think that's an important topic to really dive into the weeds, because we're working through it now. Now Bill and I both had the luxury, I guess, for pretty much all of our career outside of this. We were leading teams in our former careers. So we got very good training and on how to build culture, how to, properly screen for the best talent and all of that stuff. But a lot of entrepreneurs, and at no fault of their own, but they're great visionaries, they're great with numbers, they know how to build a business, but they don't know how to properly build a team. And that ends up being their bottleneck a lot of times. So I think that could be a valuable conversation, and we'll do that at a later date. Ray, I kind of want to start wrapping up with, and this is something we're both working through right now, but you mentioned being in the room and all the networking and masterminding and all that stuff you do. We do it as well. But you guys just launched your own local networking meetup event, and it's under the Dealmaker brand, just as we did. We just had our first one in January. So speak to the not just the power of networking and even local events and stuff like that, but the power of curating that type of room and being the one that's facilitating it, kind of administrating, being the administrator of it. What have you seen so far in doing that, and where do you see that going?
Yeah, one of the I guess the core tenets of the deal maker is your network is your net worth.
Yep.
And we've got that, not just that one, but like the 4 or 5 things that they have. We've got a banner with that at the front of the room, and so that's part of what we do at the beginning of each meeting. There's a time we just get the whole room to kind of join together and one voice of saying, the deal maker creed. And we see it, right? We see that lived out. Your network is your net worth. Just, I mean, even, working with you guys. So we met you guys, a couple of days there in Asheville right before leaving. I, got you guys to come out of the room. Hey, here's an idea I've got. And, you know, that could have easily been a, no, it's not going to work out. But we ended up, working out something that I think you guys have been happy with. It's been something that's helped us sometimes when our deal flow was greater than the capital on hand. So that came from a network, being connected with other people, and from heck, the executive assistant that I have now, it came from me meeting some other entrepreneur, totally unrelated business. I talked to him and his wife, and we had dinner with them, and he's telling us how good his assistant is. And I said, does she have any more capacity? And he said, yeah, I think she does. And so 3 weeks later, I'm working with her. And now that's been about 3 months ago, and it's really moved the needle for us. But I was very hesitant. I knew I needed one. I knew I needed to offload some of the things that were tying up my time,
Right.
keeping me from but it came from networking, to find the right person that I felt good about hiring. But if you put all that back into that deal maker room, it's facilitating deals. We know that we're seeing people make the connections. We have we have some out of state borrowers, and one guy's even in Canada doing deals here in Alabama. And so they've been able to connect with real boots on the ground project manager type people here that you need. If you're going to do real estate from remote, your local team is very important. And so we're finding that people are able to connect the dots for their local team by coming in, for those events. So I'm not sure where it goes exactly. We're going to keep ours really focused in more for the rehabber type investors, rather than, hey, it's about everything in real estate from apartments to new construction to this. I welcome those people if they want to come in and chat and network. But as far as what we teach and educate on, it's going to be mostly focused to the rehabber crew.
Yep. No, I like it. And I think for you, it fits in to what you said earlier. You're kind of in that legacy building stage. So, and when I hear that, I think of like Jim Ingersoll. I don't know how many people local to us I've heard say, I went to my first deal maker event of Jim's, and I was shy, I didn't know anybody, and now they're crushing it. I mean, a bunch of people. It started with Jim curating that environment, right, and getting them involved, and then now Jim may not have even had a conversation with them at that first event, but he put the room together, and that's what his legacy is going to be, among many other things. But just being a genuine, we walked around at our first event. It was about 60 people at our first event, and I walked around the room at kind of halfway through the event when everybody was just talking to each other. and I was hearing conversation. I mean, deals were literally getting done or relationships being sparked that I knew one or two of these conversations is going to lead to a lunch, is going to lead to possibly a partnership or a connection that evolves into something. And the legacy piece of it is it's just fulfilling to know that, you know, I because of Jim's inspiration to me, I put this room together, and then it might lead to something else, and then they might put something even bigger together. So that's a big piece of it for me as well. So
Yeah.
yeah,
Yep.
but
That's exciting.
yeah, it's good stuff. So Ray, is there anything kind of as we wrap up that you want to leave with the audience? Any type of advice, any words of wisdom, books to go read, podcasts to listen to, anything like that you want to leave them with?
I would say that so much for us changed when we really began to think of ourselves more as business owners rather than real estate investors.
Okay.
Because we, as we, even in that first 6 or 7 years of private lending, we still really identified as real estate investors. But we do all this hard work with real estate, our lending, running our business. We ultimately do it to make a living, right? That it as much fun as we have and the networking, and it's about serving other people, and we get paid for doing that. And so if I could encourage people on just anything related to how do you really build the business part of what you do, we're so passionate about it that like with the rehabbers that we work with, we see the challenges that they have from day to day, whether it's marketing for deals, project management, cash flow management. So we've developed tools for that along the way because we see the struggle. And so we just build a tool because we know it from our business, and we make it available. So it just moves the needle forward so much more when you develop those business skills.
Yeah.
And really start moving from transactions to really transformational with running a business.
I love that. So I want to encourage everybody. And it's funny because with the podcast, we can kind of see like a heat map of where our where our audience is from. And I always check it out before I, hop on with a guest to see in their area. We have a decent amount of audience in Alabama. So there's people listening that could potentially be candidates to be investors, borrowers, whatever the case may be. So we're going to drop all of your links and everything in the show notes. And I encourage folks, whether you're just getting started out in real estate or you're well seasoned, but maybe looking for a new capital partner, reach out to Ray and his team. And I will say, as I've already said, his team is phenomenal. So if you can't get through to Ray and you end up with somebody on his team, you're probably in better hands. So it's
they're great.
Yeah, really good stuff. So Ray, I appreciate you coming on here, man, sharing the last hour with me, and I think you've dropped several nuggets that will help inspire some folks, and I appreciate you doing that for us. So.
I've enjoyed it thoroughly, man. It's great to be here.
Yeah,
thanks for the invite.
All right.
All right.
That was good, man. Thank you for tuning in to this episode of Burning the Ships. I want to give a special thanks to our sponsor, 608B Capital, helping real estate investors secure fast, reliable funding to fuel their boldest moves. If you're ready to take your investing to the next level, visit 608bcapital.com to learn more. If you found value in today's episode, please take a moment to rate and review the podcast. Your feedback not only helps us improve, but it also helps us reach more people who are ready to burn the ships and commit fully to their goals. And don't forget to share the episode with someone who needs that extra push to take bold action. I'll leave you with this. Burning the ships isn't just about removing the option to retreat. It's about unlocking the courage to charge forward. No matter the odds, the past is behind you and the future is yours to conquer. Thank you for listening, and I'll see you next time on Burning the Ships.